Sometimes if I'm feeling a little, let's call it self-reflective, sometimes I do ask myself, why me? Why have I been put in this position over the past 5 or 6 years, right? And why have I been able to build up a pretty big following that I'm very, very thankful for? And a lot of people, especially people that don't like me, they get very, very frustrated because they see how many people still follow me and they're like, this man's lost millions of dollars this year, millions of dollars. Why has he still got such a big following? Why do people still watch so many of his videos and content and things like that, right? And so I don't think I'll ever understand it, just to be quite frank. I don't think I'll ever get it. A lot of times in life, you don't understand why you're put in certain positions when you're kind of in that moment, I feel like, right? And I think one of the reasons why I've been able to build up a very large following over the years, right? And some that, especially that don't like me, say I'm a cult leader and those sorts of things, right? I think one of the reasons is, at the end of the day, I'm a retail investor. I've always been a retail investor, and I always will be a retail investor. And over the past 14 years, I've been fortunate to made, money from stocks that, people could only dream of, right? And I've also lost money on stocks that people could only dream of, right? And everything I've documented, and my failures, my successes, everything, I put it out there. And I'm never afraid of that. I never shy away from it. And I think people like that, and I think people respect that, right? And I think one of the other reasons is, since I'm a retail investor and since most of my money is always tied up in the stock market, right? And I'm an individual stock picker, I just understand the mentality and understand what people need at certain times. And I feel like this video I'm about to put out here is one of those videos that's very needed in the market right now, especially going into 2023, because a lot of people are feeling certain kinds of ways around the market right now, right? And yeah, so I want to get into that. I always want to say thank you for everybody that subscribed to the channel. I appreciate every single person. It's seriously in a massive, massive way, right? Even after a year where I got absolutely tore up, I appreciate every single person who always joins me for these videos. And I never take it for granted. So I do appreciate that, okay? So let's go ahead and jump into this. I got a lot to show you guys. I got a lot to talk about, okay? The stock market, this market sucks, okay? The reason this market sucks so much, right, is, what we're looking at here is the public count, right? And the public count's obviously been devastated. This is an account that at its peak was at probably $2 million. And so this account's lost about 50% of its value. It's been absolutely trashed, right? Since this time last year, it was maybe 1.7 mil. It's got a long way to get back. It could be several years before this account gets back to new all-time highs, okay? And you look at a day like today, the account was up 43,000. I think by the time the market closed, it was up like $47,000, right? Which is, when I first started working at Quick Trip, it was amazing that I got a job that I could pay $40,000 a year when I first started working at Quick Trip, right? And then I got bumped up the ranks and I got promoted. I worked my butt off and I started making $50,000 a year, right? That was amazing. And now, to make that from one of my portfolios in a day is great. But at the same time, it feels like crap because this account's down so much. And it feels like in this market that $43,000 or $47,000, whatever it finished out at the end of the day, could be wiped out tomorrow. It could be wiped out next week, next month. That's the market we're in right now, where every single time you get a good day and your portfolio sees a nice green day, it feels like, how many days until all those gains are lost? Is it tomorrow? Is it next week? Is it next month? That's how this market feels. And this is a nasty bear market, right? It's a really crappy market because so many people are getting margin called left and right, okay? This was as of November. Now, keep in mind, December's been an extremely ugly, basically, month for the market. Between what's happened with Tesla stock, what's happened with indexes in general, it's been an awful month in December. So don't be surprised if when the December numbers come out, we're somewhere in the 500s when it comes to margin debt, right? Which at the peak, we're well into the 900s when it comes to margin debt. Now, this is a healthy thing for the stock market long term. I'm going to be very clear about that. But we can't deny the fact that it sucks, because if you go from $900 billion plus of margin debt to a place where you're probably in the 500s right now in just over a year, that means massive amounts of people got margin called left and right. I'm somebody that's been down that rabbit hole before. I've been margin called before. I know that pain. It sucks. Now, it's very healthy over the long term to get these margin numbers way down and for people to know that margin's not the answer to your stock market, dreams and those sorts of things, right? But it does suck when you're going through it, okay? You look at a day like today, all these stocks, so green out there, right? But at the end of the day, when you see all those gains, you just kind of ask yourself, in this sort of market, Is that lost tomorrow? Is it lost next week? That's what it feels like in this market, right? It just feels like these gains are here today, but they're gone tomorrow. Whereas in a normal market, you get gains and you're like, okay, we're going to keep building on this, right? In this market, it doesn't feel like that. It just feels like, oh, this is just some fake short-term rally and we're going to go lower in the end, right? This market sucks for so many different reasons. Let's talk about Palantir, okay? I think Palantir is obviously a very popular retail-related stock in the market, right? I think it was, one of the more popular retail stocks, right? Since this company had its direct listing in 2020, if you bought this stock ever, you're down. You never have gotten positive reinforcement in the stock ever. It's been down and down and down and down. Every share you bought, you went down. And that's not natural. In the stock market, usually if you buy a stock, right, you're going to get some shares maybe you're down on, but then you're up on and those sorts of things. For a stock like Palantir, basically every single person that's ever bought that stock at just about any price is down. And most folks are down massively, right? So you get no positive reinforcement in this market. And this is why this market sucks so bad, because you're never getting that positive reinforcement of like, hey, I'm making money. In a normal market, right? Let's say you build out a portfolio of 10, 15, 20 stocks, right? Let's say 20 stocks, for instance. You might have 10 of those stocks doing okay. You might have 5 of those stocks doing great, and maybe 5 of those stocks doing bad. And so everything kind of evens out, right? But in this market over the past 1 to 2 years, the problem is, if people own 20 stocks, it feels like all 20 are down, right? And or 15 are down or something like that, right? Which is a horrible, horrible feeling. And the ones that, if they are up very marginally compared to the ones that are down, because the list of stocks that have gone up over the past 1 to 2 years that are up 40, 50, 60% versus stocks that are down 40, 50, 60, 70, 80%, right, is a big difference. And so that's just why this market's been so dang brutal to go through mentally and financially, to be quite honest, because you're looking at stocks like this and it's just you never get positive reinforcement. You never get positive feedback. It's just down and it's down and it's down. It's like the valuation looks so compelling. Look at the balance sheet. Look at the income statement. Look at the story. Look at the revenue growth opportunity and net income growth opportunity. But all of it means just a lower share price, right? And so with a stock like Palantir, you're kind of looking at it and it's like, well, I buy for 6, but it might be 5 next week or next month, right? Or it might be 4. And that's just what happens, right? When you're just going down and down and down, it's a horrible, horrible feeling. Now, it would be one thing if it was just small cap stocks. It would be one thing if it was just stocks like Palantir that are a little more niche but popular in the retail community, right? And if it was just the AMC stocks and the GameStops and all those stocks that have been absolutely obliterated, right? But the fact is, it's even the biggest of the biggest companies in the world. So even if you were getting into these stocks, you've gotten absolutely wrecked over this past year or two, right? Amazon, this is just this year. This is just this year. Amazon's lost $866 billion in market cap. Apple's lost $820 billion in market cap. Google McDougal's lost $764 billion in market cap. Microsoft's lost $759 billion in market cap. And Meta's lost almost $600 billion in market cap. And by the way, at the peak, it was down more than that. I think it was down like $700 billion in market cap at the lows for Meta. It's come back a decent amount over the last 2 months, essentially. That's brutal. These are the most popular, most famous stocks in the stock market that most people look at with the best balance sheets, the best income statements, the best stories, right? And people look at it and usually feel, hey, if I invest into these, it's safe. Yeah, Palantir might not be a stock or some small cap, but you know what? These are the stocks that are safe. And then what? To lose $800 billion of value, $500 billion of value, $700. This is why this stock market sucks so bad, right? Look at this. Just these stocks that are shown on your screen. I saw this on CNBC. I was like, I got to take a screenshot of this, right? The combined losses in 2022 is over $5 trillion just in those 7 stocks there. Just in those 7 stocks, over $5 trillion. The numbers are so large that sometimes it gets hard to even fathom how big these numbers are, right? And these are the most popular, usually seen as the most safest, best return, risk rewards you're going to get in the stock market. And it's been absolutely brutal, right? Now, the next component I think is very important, I point out here, is who's got money to buy stocks, right? You saw Tesla just in complete free fall this month, right? And Tesla started to come back over the last couple of trading days, and we'll see if that I think there's probably a lot of people playing kind of the short term and around delivery numbers and expecting kind of a big short term pop here in Tesla stock, right? But I think one of the factors why that stock just continued to get sold off and could not find a bottom anywhere in sight is usually with a stock like that, people come in because they have money and they're like, dude, this is ridiculous. Like Tesla stock keeps trading down. This is stupid. I'm buying a bunch of Tesla shares, right? And so you get this big buying pressure that comes in that just, puts a bottom, like a floor on the stock, right? But the problem in this market is, and in this economy is, who's got the big money to buy Tesla stock when it was going down, other than maybe fund managers? And the answer is retail really doesn't. Retail's tapped for the most part. And not just because they've, been brutalized in the market and maybe potentially gotten margin calls or whatever, right? But inflation is sliced and diced, folks. I went to the store to get some medicine, right, the other night from my wife. And I was like, Mucinex is, for this little 6-ounce bottle, is $18.49 now? I was like, that's just ridiculous, right? And so with all this inflation, just people have less money to do everything, whether that means to go buy a new iPhone or whether that's to buy stocks. And so you don't really have that retail buying pressure that you used to be able to have. I'm sure every single person watching this video right now, wishes they had more money to buy stocks right now. Every single person, including the one that's recording this video. I wish I had more money to buy stocks right now. But the fact is, everybody has significantly less money because they've been sliced and diced. The economy has started to fall off the rails, and inflation has basically stolen people's money away that you used to be able to put into stocks. That now it's just like, you're more worried about bills. If you're somebody that makes less than $60,000 a year, it's hard to make it out there right now. If you're watching this and you're, somebody that makes $250,000 a year, or $400,000 or $500,000 a year, you guys are probably doing just fine for yourselves, right? But it's the folks, in fact is most people make less than $60,000 a year, right? And so those folks just don't have the disposable income left over at the end of the paycheck to go say, hey, I'm going to go buy some stocks now. And that's tough, man. And that's tough. And that's the brutal part of this market that is more than just a market. It's the economy in general, right? Because your money's being stolen by inflation. It's just dollar after dollar after dollar. And all these things add up. The Mucinex being $18.50 and that milk being more expensive and the gas and natural gas and all these things, it adds up, right? No, we can see this in the numbers. I mean, this was before holiday season. Look at what happened with the personal savings rate. Can you imagine what it's going to be like when after the Christmas numbers come out? Oh my gosh, okay? And it's very, very clear what's going on out there, right? No, people are going to blame the things that should be blamed, for this disaster on our hands right now, right? They're going to blame the government. They're going to blame politicians. They're going to blame the Fed. They're going to blame China, right? They're going to blame Rona. They're going to blame inflation. They're going to blame all those things, plus probably more, right? And to be quite frank, all those things do deserve the blame for the levels of inflation we've had and basically the fact that people's savings have gone down massively, okay? But you know what the one thing people aren't going to blame? And we just got to be honest about this, okay? And although these all deserve the blame massively, people aren't going to blame themselves, and that's unfortunate. Do you remember in Rona when you'd go to the mall and there were lines, literally lines, at the Louis Vuitton store and people all messed up, just dying to spend $3,000 on a handbag, $4,000 on a handbag? Do you remember the lines at every single luxury store? Because I certainly do. I was somebody that actually went out there. I was never scared of Rona. So I would go to the malls, right? And I would mask up because you were forced to be masked up at that time, right? And I'd go to malls and I'd walk around and I would just watch these lines of people just dying to get in, to spend money at the Louis store and the Gucci store and all these high-end stores because they just were flush with cash, right? And so instead of folks saying, I'm going to save that money, I'm going to sock it away for a rainy day, they went and spent money like crazy. And bought new iPhones, and bought new Macs, and bought new iPads, and bought new Louis purses, and bought this and that and that. I've never seen anything like this in my life. Never, ever seen anything like that. Lines to just get into a store because it's that busy. It's ridiculous, right? I live in Vegas, right? Right now I'm at the Arizona house, but I live in Vegas. And I would go down the strip, and I would see people just walking around with, all these high-end brands, and they're spending all this money, whether it be on high-end watches or handbags or whatever it is. And I just, I know these people don't have that kind of money to be spending, like at these ridiculous stores and spending thousands and thousands of dollars. But at that time, there was so much money sloshed out there between the stimulus programs on the federal level, on state levels. There was also so much unemployment stuff going on. There was also, honestly, a lot of let's call it fraud that was going on out there and people taking advantage of the system that then got all that money and just were spending it like crazy at all these different high-end stores and whatnot, right? And blowing through. I mean, absolutely blowing through. And so instead of saving that money and stocking it away for a rainy day, they blew it. They completely blew it in Vegas and wherever, right? And I remember going to the Planet store. And I remember during that era of going to the Planet store, it was so busy. It's hard to even explain how busy the Planet store was in the summer of 2020 and the summer of 2021. I would go into that store just to see how busy it was and whatnot. And it was ridiculous. It was like a club in there, man. It was like a can of sardines, like huge lines just to get up to the front counter. They'd have 6 people checking in, to check your license. Because they have to check your license so you can get in because you have to be 21 and up to go in there, right? Like having like 6, 8 people at the front counter just checking in people so you could go in there, right? And I remember just going in the store and thinking, man, this is like the greatest company in the history of mankind. Like, look at how busy this place is, right? Unfortunately, it was a false demand. It was a false demand in the end, right? And Planet should usually be fairly busy on weekends and in the summertime and those sorts of things. But that level of demand, that was the Fed pump. That was the stimulus, the ridiculous money that was put out there. And I don't think I'll ever see the Planet that busy ever again, to be quite frank. I think it can do well. I think the company can do well. But I don't think I'll ever see that level of busy that store was in those days. I don't think I'll ever see that again. I mean, it was like, even the outside, it would be just like 50 people, 100 people on the outside just waiting for Ubers and taxis and rides and those sorts of things. It was just, it's like I said, it's hard to even explain how busy it was. But it was a different era. It was the cheap money era. It was so much stimulus and government pumping money out there like crazy. And companies like the Planet, they benefited in a massive, massive way. And their same-store sales growth was ridiculous, right? Numbers that we might never see again. Now, next up, and I think this is very important, I mentioned this, it sucks to buy stocks. It's a horrible feeling when you're buying stocks and more than likely you're going into a recession, right? And economists place a 70% chance the U.S. is going into recession in 2023. It's no fun. It's fun to buy stocks when you feel like the economy is going to get stronger and things are going to get better and better. It's a horrible feeling when you're looking at stocks down 40, 50, 60, 70% and you're considering should I buy it or not. Not because it might be a deal in long term, but because your understanding of like the economy could get far worse, their earnings could get far worse, or revenue, and everything in general could get far worse from here. It's a horrible feeling to buy in that sort of environment, right? And it's a very, very tough thing. It's a very, I would call it borderline annoying thing to have to deal with in the market when you're like, I think things are going to get worse, so how am I going to buy now? It makes it a very, very tough decision, right? The golden era, in my opinion, at least in recent times, to be an investor was 2010 through 2019. And the reason it was such an amazing time to be an investor and such a great time psychologically, not just financially, but psychologically to be an investor, is it was a very stable time, right? The economy just was getting a little stronger. Now, a lot of these years didn't have great economic growth. And we still had dips in the market here and there. But you understand, like, that's part of the market, right? And over a decade, like, you're going to have dips in the market. But the economy was always getting stronger, and it was seen like next year will be a little better than this year. And yeah, we a lot of those years were lame economic growth, but they were economic growth nonetheless, right? We had worldwide stability, no major drama like we do now, right? Between obviously Russia situation, obviously China, Taiwan, that could happen there, right? We had worldwide stability. Inflation was in check during those years, right? The Fed was helpful to the market, but it wasn't like the insane, money printer stuff that obviously we saw in 2020 and 2021, where it just went completely out of control. So that was nice. And we had corporate earnings that were strong and they were getting stronger. And you were usually confident that corporate earnings were going to get stronger every single year, right? Obviously, a lot of folks expect corporate earnings to deteriorate over this next year, if not 2 years, right? And so that makes it a very, very tough. So this was like just an epic era to be an investor, right? Now, I will say there's a good part of this, okay? A very good part of this. The Qs are, this was as of yesterday, down over 36% from their all-time highs. Over 36%. That's brutal. And that's in just over a year's time. Absolutely brutal, right? But there is a good part of this that we have to discuss, right? And I'll put it similar to this, right? I have kids. And if my kids get out of line, right, check them. Either yell at them, got to put them in timeout, do whatever I got to do, right? And, let them know, like, that's not the right way to act or to be in those sorts of things, right? And so the thing I'll say about this market and being so brutal is we're kind of like being checked, right? And the market's checking us all right now and getting us into line. And so whether it's experienced investors like me that got too far off of their course, right, which was, my blueprint is all around buying mostly profitable companies and growing those positions over time, fair PEs, those sorts of things, right? And I definitely, in the back half of 2021 and into the front half of 2022, got away from that and bought way too many unprofitable stocks. I used to own like 1 to 2 unprofitable stocks, and then all of a sudden I went way off my blueprint. Next thing you know, I'm buying 4, 5, 6 unprofitable stocks, putting tons of money into them. Stupid. And the market has checked me back to reality. And it's like, get back to your blueprint, brother. You're not quite thinking straight. And to all the new investors in the market that thought, this is such an easy game. I can just look at a stock chart and make money. No, it doesn't work like that. It's not that easy, okay? And so the new investors are being checked like, there's more that goes into this. If I'm actually going to do this, I need to actually read annual reports, listen to conference calls, run, numbers on these companies over the next few years and projections, and understand if I'm paying a fair price for this company. There's a little work that actually goes into this, right? And so the experienced investors are being checked. The newer investors are being checked. And so ultimately it will make a healthier market for the next 10 years. But we can't deny it's not painful. No different than if you have to yell at your kid, they start crying, or you put them in timeout, they're devastated. And that's kind of how we feel as investors right now. We're crying, well, maybe not crying, but you know what I'm saying, right? You understand those emotions of it's brutal, absolutely brutal to go through that in the short term. But ultimately, it makes you better, smarter, and more disciplined for the long term, right? Now, I think a lot of folks are expecting it to be a down year in the market in 2023, but I think it's fair to understand that it very rarely happens. So it can happen in 2023, and I wouldn't be surprised if it happens, but just remember, very rarely ever get back-to-back years of down in the market. I think that's just something to fathom, right? And the next point I want to make up is for all the folks, you got to understand, you got to be buying into this sort of market, and you got to continue to buy and just relentlessly not stop buying, okay? The fact is, it never feels good to buy in a crash. It never does, and it never will, okay? I can tell you, for anybody that was buying in 2008, it didn't feel good. For anybody buying in 2009, it did not feel good. For anybody buying in March of 2020, it did not feel good. And for anybody buying in any of these time periods, it did not feel good. So although it's going to feel like crap when you're buying and your stocks might even go lower and lower and lower, at the end of the day, you are making the right long-term decision, and it's important to remember that. But it feels like crap. Absolute crap it feels like when you're buying in a crash, man. And that's just the way it is. It's always been that way. It always will be that way. The people that were buying, and there's a few of them, right, in here, it felt horrible. The people that were buying in here felt horrible. The people that were buying in here felt horrible. And guess what? The people like us that are buying this year, it feels horrible. It doesn't feel fun that every stock you pretty much buy just goes down, down, down. But it is part of the process, and you got to understand you are making the right long-term decision there, okay? In less than 3 years, we've had to go through this, okay? Talking about the economy is going to be closed for 3 years. Everything's going to go bankrupt, the Great Depression, and then everything to the moon, and now back to everything go to zero, right? The market has been in the extremes for 3 years now. And I think it's important for everybody that maybe got in the market in the past few years. This is not normal. This will end, and we will have normal markets, okay, again. But unfortunately, we've been thrown into an extreme situation that has screwed up a lot of things, a lot of companies, a lot of investors over the past 3 years. The good news is, I can tell you the last 3 years will not be the next 3 years, and the next 3 years after that. We will get to a more normalized market where things actually act naturally, and the Fed's not going from full-on gas to full-on brake to full-on gas to full-on brake. That's not normal, okay? So just understand, there will be better days ahead, there will be brighter days ahead, and we will get to a more normalized environment, and we will go through another cycle like we did 2010 through 2019, and it will be very helpful to everybody. Hope you guys enjoyed today's video. As always, I appreciate every single person for joining me. Also, if you ever want to say hello to me and you enjoy the video, send me a DM on Instagram. That'll be linked down there. Also, I put out a free course for you guys for 2023 here for kind of the next few weeks essentially. That will be linked in the description area. If you want access to that, I can go ahead and text it over to you. And it's absolutely free course to get access to. So if you're somebody that wants to take advantage of that, it will be linked in the description down there. Appreciate you. Much love as always, and have a great day.